Hello, good morning. Welcome to another ES Futures trading stream. Today is Tuesday, March 19th. It is 9:08 a.m. Eastern Time in the US. Before talking about the market, let me post on Twitter that the streaming is on. I'm also add over there, let's add the link. Oh, the Discord as well. Okay. Alright. Let's go now and check what is happening in the market. Yesterday we have a gap. The market opened with a gap to the upside. The market opened with a gap to the upside. Value was higher after a day where value was lower. Right? Value was lower, and this day didn't have excess in the lower side. And also, what happened here is we had 1, 2, 3, 4 days which highs are relatively close to each other with no excess here. This high has no excess and it's weak also because it's selling from previous day high. This is an inside bar. The resolution of the inside bar is to the downside. And yesterday's high, the market couldn't take this high out. Taking this high out could have a risk, or could have increased the odds of this market making new highs here. It didn't. Rather, I had some things to do yesterday, but when I left, the market was printing an inside bar. Okay? We have a gap. There was a sign that this market wasn't strong because market was selling or buying mechanically. The first sign is, market buying just a couple ticks from the low here. The second one, this inside bar, C, was buying from A. Just one tick before closing the distributions. That was another mechanical sign. I guess, I don't remember if during the stream, this period actually closed these distributions. But this was an inside day, and we have a resolution to the downside in a day where value is higher. I have replayed this day because I wasn't present, and I have replayed this day, and something that really catches my attention, and I guess a nuance here of this day. The main thing is that K, right? K here, which gives us the break later. One is one tick from J, which is a mechanical way to sell the market. And the other thing, the most important thing, it was held back. It was held back at the time. Now, you can see, we cannot see this as a held back because the market the profile has range extension to the downside. But this high here is a mechanical high. I see this market, the inventory being held by very short time frame trading participants here. Same thing happened the previous day, right? Look at here, what happened here, just like that. A sign also that this is an uncertain market. Market doesn't know what to do. Well, it doesn't have any direction. It hasn't made its mind. Is we had a gap to the upside, and today the market is going to open with a gap to the downside, and the gap to the downside is closing the upside gap. You know, a gap close with another gap. You know, it's a market that doesn't have any direction. Now let's check our bigger or our other charts. There is something that is going on here as well. You know, we have this break in the bond market. We have a rally and break, and the low of this, the base of this rally was this range high, previous breakout. I would pay attention to these markets, especially especially with FOMC just around the corner, right? Notice something here, and not just my bad. This is not. Notice this thing here. This is gold, okay? Can you see this? Right? Yaya was talking about you know, once you learn one thing, you start to see that thing everywhere. But one thing here, this is a market that has firecracker effect potential here. Can you see this line here? How these lines line together, selling from a trend line. This is a sign of mechanical trading here. Okay, this one. This can just shoot to the upside. We can have a big rally here, right? But also notice at the same time what we have at the lower side. You know, there's a lot of stops here as well. You have 1, 2, 3, 4. The market has made a range, something that we can also call resistance here. And below these lows, the market has nothing. The gold market has nothing. Maybe have some kind of support or expected buying around this level, right? Which is the high of this range here. Which would be the high of this range here, right? That's the relevance of ranges here. Dollar is kind of like, you know, just look where dollar is. This is something worried. This can have an impact on the economy as well. You know, as crude oil prices start to increase. It's kind of like a trend is starting to form here as well. But I will pay special attention to this market here. These two, and this one in particular. And this right in front of FOMC. What's happening with the tech? This has a really big day yesterday that closed the gap. Apple, significant gap in Google to the upside. This is really weak here, very dangerous. Microsoft, Netflix, just let's not talk about this. These stocks here, these two, I wouldn't touch these ones. These are really dangerous. Yeah, this is the risk in the long side is very high in these markets. Tesla is having some. Seems like it's having a short covering rally. Market got just too short here. Notice what happened here. We have 4 highs just back to back here, another 2 here, and this market just seems like has gotten too short here. Some rebalancing needs to happen. Let's see what happens here. If there's accumulation here, this potential, if that happens, there's potential to the upside. But if there's some, kind of little high, that becomes again a sell here. Nvidia has taken, what? Remember what we have? What market was that? We was checking the firecracker effect. Oh, gold, right? Remember gold? Remember gold? What we have in gold? Let's see. Let's put gold here. This thing here. This firecracker effect that we have here, Nvidia has had that one, and all this mechanical selling has been taken out, has been repaired. Now we have a range in Nvidia, right? 1, 2, 3, 4, 5 day range here. No excess at the highs, no excess at the lows. What about the indices? Gap that has been closed with another gap. And guess what? Where this market is? Oh, wonder. 5,200. I don't know about Nasdaq. What's happening with Nasdaq? Well, where is Nasdaq? Nasdaq is 18,136. Yeah, Nasdaq also has closed the gap. There is this market. This is the Dow. The Dow here has potential. This market can shoot this way up high, all the way up to here. But it also has potential to the downside. The firecracker effect that we see here. It wasn't taken. It didn't take this loss out. It actually, this day here actually added more. This is unresolved. Notice the difference. Let's go back to this. Let's notice the difference between Nvidia here. This market. What happened here? Let's put gold here. Gold here. The potential is here, right? The potential is here to the upside. Over here. The potential here, all these stops have been removed. It has no access to the upside. It has no access to the downside. And now look what we were looking here. The Dow, right? Let's check the Dow here. And let's compare just these two. Now look at what happened. These three. This one this is 3 stages of the same potential, the firecracker effect potential at different stages. Here, this full potential here, there is something like was not resolved here. Partially, it made an attempt, but it didn't touch it. It kind of like weakened it or increased the potential here, and here has been resolved. Right? It still needs access here. Still needs access, but it kind of like has the firecracker effect happened, but not at its full potential, which is a sign of, in this case, it's a sign of a rather weak market here, right? Not a strong market. Now where will we? All right. Russell has broken support here. Now Dow could be any direction here, right? It can be tomorrow, can be trading up here or down here. There's a range here. Very weak market. The structure of the market is weak. You pick your trend here, put it here, put it up here, put it up here. You can put this everywhere. You can put a trend like here. It fits. It will fit. It will find. This one. Move a little bit higher. This 2 here fits all this 2, 3. Let's move it a little bit higher. let's move it here. It's a sign. This is a sign of mechanical trading, what James calls the laggard stage of a rally. Okay, the laggard stage. When this rally started, when March contract, when December contract ended. Rally started here, and it just have an incredible run here. The market has around almost 25% from these lows here, which is really, really good. And the market didn't have any meaningful correction since then. 5%, just a tiny 5% correction will take the market down to here to 4,900. Right? And we have that, the ES. Oh, come on. What's going on here? What's happening in NASDAQ? I would say same thing in NASDAQ. We have a range here also, right? Trading back and forth. The ES is more clear where these buys are coming from. Breakout, buy, breakout, support, breakout, support again. And if we start just digging, zooming into our market, which goes what I trade is the ES here. Nothing has changed in the weekly, or nothing has changed in the monthly. Monthly is a strong trend to the upside. The bigger time frame keeps going higher. The weekly, the medium time frame also, it has weakened here. More signs of weakening here, right? Can you see what is buying from this previous breakout? What is buying from previous week low, which is also was bought from previous breakout. And the same behavior has happened here. And also we have these three lows where it all started. On my bad, there was another one here, right? This one repeated here, then here, then here, then here. And now, of course, the market is going to be bought from 51.93, right? Why? Why is going to be bought? Because traders are doing that. Traders now are in the habit of buying from breakouts. Previous breakout, now support. That's where the market is going to bounce. Right? Of course, it's going to happen. It happened over and over before, and traders do what works until it doesn't work anymore. Now, where is 51.93 in the daily? 51.93 would be here. Right? Let's extend this to the right. Now, getting inside Friday's range, closing the gap, you're getting inside, and that's the potential buy here. Now, check your trend. Let's move this. Well, this trend is going to be now. Can be here, maybe. Can be here, maybe. It's right there. The market is right there right now, around the 5,200. It's just, I'm not saying I'm going to buy from there. I'm just watching this. This job, trading, is about change, and most of the job that traders does is watching, observing the market. That's what we do. The performing part of the market of the job comes after all these observations are made. First, we need to get in sync, try to understand what the market is doing, and then if we see an opportunity, the market may show its hand sometime during the trading day, we can take action. Hey Jaya, good morning, sir. How are you? We are 3 minutes in before the opening. Now we were talking about and volume. Look at what happened yesterday, man. Look at the volume. How low this volume was. There was a jump in the room of period, but it's really low. I'm not comparing to Friday. I was comparing to Thursday here. But look at this, man. This is comparing to Thursday. Oh, actually, the Thursday is higher, right? It was higher compared to Thursday here. But check this out. When the volume came in the last period, and the runoff, and still is low. Right? That also delivers something. It was a thin market yesterday. We have a range, 2 minutes, 1 minute before we have a range here. We have a range. Notice this range here. I'm trying to make this in a really short period of time. How I can do it. We have this range here. Right? We have another range here. I will consider this one, another one here. There's a lot of weakness everywhere here. There's a short-term trading here. Notice this low, this mechanical buying here. Notice this buying here, non-excess here, non-excess here, 3 lows here. This market has no conviction. Now, the market is going to open. Let me take a screenshot of this thing. What is the situation of the inventory? What kind of inventory do we have? I didn't do it. Come on, man. Hurry up. All right. What do we have? Inventory is 100% short. Prominent PFC. Downside gap. Right? This upside gap has not been closed yet. Market is opening right here. I need to restart my charts. When I don't close it at the end of the day, it takes a while to upload. Alright, and sometimes it actually it didn't upload. It didn't do it today. Well, it's not working. Let's put it aside. Oh boy, let's move this one. Gap has been closed. Previous gap has been closed. Right? Market paying no attention to the overnight inventory. I would be hesitant right now to do anything. This is my personal view, okay? And the reason being, this is the 5200. There's a lot of buying that has a tendency to happen around these century numbers. I think safer around the 5210 or maybe around the 51.9. I remember the 51. Oh, look at that, man. Look at that. There's a lot of stops being hit here. Let's see if this one has downside extension here. No. If you have seen when the market comes to this high and then just boom, have a violent move to the downside, those are the stocks being hit. When the market moves that way, there's somebody pushing. There's somebody and that's one trade, right? People or traders that have the capital, they just push the market, and the trade is just that, right? A couple of ticks, a couple of points, and boom, that's it, right? If there is something serious to the downside, the market then will come back and take those and follow the direction that trade. No attempt to make any counter action to this short inventory. And now from yesterday, remember from yesterday we have this serious, weak level. Whoever sold to this level, this is nothing safe. Also from yesterday, what we have, Friday, I have something from, there's no excess on Friday. All right, and what do we have tomorrow? FOMC. So the odds that we have, man, in this kind of days, what I expect is some rotational day, thin rotational day. But every time I expect something, I then realize I have bias because we never know what's going to happen, right? And when you expect something, expect the unexpected. Yesterday I noticed that this market didn't have, early in the session we saw that he said, okay, man, this is not a serious buying here. There is just didn't have it here, and then we have another sign of weakness here, and then the market having the potential to make new highs, it just didn't do it. Right? That was the expectation. And what happened when you expect it doesn't happen? Now the markets make another attempt now to have downside continuation. Where is selling from? Half back, previous high. Did you see that movement? Did you see how it moved? Like, boom. I don't like when markets do that. The market is just opening. Right? It's too early to see, but when I see those kind of movements, it's really hard. That's a hard day to trade because you can place a trade and you will be stopped out multiple times. And just the market does that and does do that kind of movements and then just come back. But where did that came from? It came from half back. We came from this high. You choose it. A very mechanical trading going on here. Where is the market is at? Where is buying it from now? 5,200. Okay, I try a short. Right when the market opened and the market didn't pay attention to this, I try a short. I didn't take my profits. But and I closed for a loss. When I saw the market not having it to the downside, I closed it. I may re-enter, but no, it is around the fact that it didn't have it to the downside and having the 5,200 here, yes, I will let the market sell here. That's my opinion. Right? You need to have your own opinion as well. What is happening? What is your analysis of the market? What is your appreciation of what can be going on here? Man, it's just taking too long to. I will need to close this. What the heck happened here? The market is trading back and forth from the 5,200 here. Come on, man. Nasdaq is aiming to the down to oh boy, that market is buying. Oh, come on, man, look at this, buying from Halbach. This is not going to last. It has good odds. This low is good. Market is coming back to check this low here. Okay, let's check what's going on here now. Oh, yesterday. Mechanical selling and buying at visual level is a sign the level of conviction in the market. Yeah, yes. When I see, for example, you know, when a movement, when I can label a movement as a strong, right? If I buy, or if, for example, let's call it Golden Sachs is buying, which one is stronger? Of course, Golden Sachs, they have more staying power. I might close my position if if I am 2 points underwater, I may close it, right? If I don't see my trade develop, I have my own rules. They have their own rules, but they have more staying power. If they buy, they're buying to stay. They are not buying to for a trade that is going to be aimed to 2 points or 2 ticks or a swing or whatever, right? They are allocating the customers, the clients, money, right? And the lack, or when the market has a visible movement, that is a sign that who is doing the trade. You know, when these people are positioning themselves, you know, you acknowledge their presence by actually not seeing anything. Come on, I can see a selling here, for example. There is nothing here, and the market has just is pushing, and there is some kind of retracement. And there is stop, let the market you know, breathe, you know, come back. There's a little rally, and then start pushing again. You know, that kind of behavior, for example. No? When you don't see, okay, there was a lot of buying or selling from this level. There's a lot of buying, selling from halfback, which was at this level as well. Then we have the 5200. That's also a sign. Around these levels, you know, if there is some hedge funds, you know, what they will do, they will just leave this market along here and trade either down here around the 90, which happen to be, right? We have checked that it's a potential area where the market can be bought, when some buyer can come. Which, what happened? Look at this. What else do we have there, right? This is a reference. This is a reference for another type of traders, for short-term traders, value at a high from this day. Yeah? And we saw this in the daily time frame, that this could be a potential buy, because there's a trend line. If we extend a trend line in daily time frame, we see the trend line. We have one here. Or they can buy or buy around this level, right? The 5210. Or what do we have here, for example? We have this yesterday's low here, which puts the market back inside this range, inside yesterday's range. And everything is coming from this level here. You know, all that happened yesterday when I did the replay. Halfback was, halfback wasn't here, halfback was right up here, exactly to the tick. It was halfback. It wasn't here. It wasn't here. It was right here. This tells me who is doing the selling here. Something that I noticed yesterday too, there was not kind of like, there are no real sellers here. No, there are no real sellers. No, not the real sellers, no serious selling. I guess I should say there's no serious selling. Nasdaq has had some extension. What's happening in the bond market? Let's check that too. Oh, it has a good rally there. Boy, look at this, man. Nasdaq closed this gap with another gap. most of this volume has been taken. This one has been out, this one is out, this one is out. Now, if there is some serious selling, okay, there is nothing here. Market can keep its way lower here without any problem, any issues here. Now, this market has clearly 52 now. It's not paying attention to the bond market, at least now. It's getting closer to this area from this day. Let's remove this setup. It's not setup. Setup now is up here. Sign of weakness, right? This day, value was absolutely lower, but it has some absorption at the closing. This didn't let the market break. Yesterday, it removed the overnight inventory from this day. It was a weak upside day yesterday. Now, price can be very misleading. That assessment we made it. It wasn't a strong day. We made it. I guess. I don't know. It was during these 3 periods. It's not that this market wasn't as strong as price was suggesting. Now, I wouldn't be surprised here. I wouldn't be surprised if the market do something like this today. Okay, again, I guess I have a bias here. Let's put this on the side so you can see what's happening here. We have, by the way, yesterday we have really nice profile, really nice shape here, and really nice, and this day as well, really nice, huh? Something like that. But we have a hole here, and I wouldn't be surprised if the market fills this hole with something like this today, a rotational day, back and forth today, and after that, if that happens, right? What do we have for tomorrow? Tomorrow's FOMC, we have 1, 2, 3, 4 highs here. This is your firecracker effect. This is a very questionable base for a sell or a break here. And in the lower side, we have this thing, this one, and absolutely weak exponential level down here. And notice this. I haven't seen this in a while. Notice this, really nice, right? Really nice. Now this is a crazy range after range after range inside a trend. I guess the bigger range would be this one. Then this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 day range here. And there's a lot of trade that can happen here to the upside without taking this high and then come back and check this one, or checking this one, come back to check this one. It all and we have FOMC. I guess there's tomorrow. I think that we can have some serious volatility tomorrow, especially during the question round, after Chairman Powell speech, which happens after the FOMC around 2:30 p.m. I'm gonna see. I may do some stream, just to see what happens there. Look at what's happening with Nasdaq here. It's buying, adding value, adding volume to this area here. This area hasn't been clear. But the days we have a downside day now. We had a trend to the downside of 1, 2, 3 days to the downside that ended yesterday. There's no more trend, no more downside trend yesterday. And the potential to have upside, resume of the rally. It didn't happen. Now there's change again. We have a downside day. So the market has no direction here. I have made a trade. I have made a trade here at opening to the downside. I expected some downside continuation. It didn't happen. I closed that for a loss. And here I made another one around this halfback when the market was bought from here and just have a little rally. I sold that one. But I closed that one too because it didn't have conviction to the downside. And this kind of trades that happen at the opening are really risky, right? I wouldn't take this kind of trades if we didn't have a gap today, okay? And what make me close these trades is also because it's around, we have this 5,200 here, which is something I increases the odds of the market coming back and forth around this area here. You also have a significant, very prominent overnight POC here. So, am I negative? I don't know. I haven't checked. I was negative here, but I have some couple trades in Nasdaq that are positive. Really short ones. I think when I don't see continuation, when I see conviction in the market, I just close those ones. Now let's see what's going on here. This is a negative day here. What about volume? Really low volume. It opened, the volume we have yet today is the opening volume is lower than this day and lower than Thursday as well. We are 21 minutes, 21 minutes. We may have something here, actually. Let's see. Oh, come on, man. Let's close. Remove that. Let's move this one down here. Okay. This is 2/3, so that the other one may see. What we see here. 50 minutes. 20 minutes, 30 minutes should be like another half of this range, right? Kind of up here, and that gives us a little bit higher volume than yesterday, which put the market basically where Thursday was, which was one of the highest of last week. Doesn't mean anything. I'm just checking that. Doesn't mean anything, right? Not now yet. Now this gap high now is gap closed. This is not a reference anymore, but I will put it here. With time, with practice, you will start to remember this day, right? This reference here, and see what the market does around this level. This goes back and forth from this level. Is a sign what type of day we're having. For example, right now it's right there, right? What's happening? Let's see what's happening. Let's see what happens here. It got there. It was sold from that. It just got there and sold. Now it's selling, right? Where this selling is coming from, for example. Now I can say, it's having something to the downside. It's exactly from this high. So the market is paying attention to this. So if the market is paying attention to this level, it's the potential or the odds that the dominant traders right now of this movement are not the strongest one. Right? Now this is gap. Gap close. This is gap low now. This overnight distribution is from this day. It's not a reference anymore. What happened this day? Oh, it took all this overnight. It took all this overnight out. Not that I am interested, because this was very thin. And why is not that relevant? Okay, for what is happening. Notice what you have here. Okay, well, I don't see, but this day has 170,000 something of volume. Right now, the first period, only the first period had 134. This period hasn't even closed yet, right? And it has that volume. Almost same. 20 minutes of trading in regular trading hours has the same volume, about the same volume as 16 hours of trading. If there was any long here, just think about this. If there is any long here, will these longs wait until the market comes back here to close, for example? They could have closed up here, they could have closed up here, or when they see the market coming lower and lower and lower and lower, they might have closed, right? And one, there is no enough volume here. Two, these are short-term traders. These are not positioning for the long-term trade here, or investing or whatever. Right, or hedging, it's just not like that, right? Most of this inventory is gone here, or at least most of the longs is gone here, and the remainings are gone here. The daily time frame has the tendency to last longer, because there still can be shorts in this market. My bad. There still can be longs in this market from this day. And this is part of the job. Right? This is the job. Many people don't or cannot accept the fact that most of what we do here as traders is observe the market. Just observe the market. Watch the market. Mm-hmm. The upper side, this is a really important reference. This one, don't forget about this one. This tomorrow, FOMC, if nothing happens today, this could be a really important reference tomorrow. All this selling, especially if we have some, I don't know what's going to happen today, but the inventory gets too short today. This becomes more and more relevant. And remember, above this, we have a week high. We have a week high, non-excess high here, and 3 highs, so cluster of 3 highs here. And the high, the all-time high doesn't have that significant, it's not an impressive excess we have here on the highs. The market is coming back to this level again. All these shorts here. They sold from here, now they don't sell again. Probably we will have some buying now. If that happens, why do I have this here? It should be this one. Oh, it wasn't working. Yeah, okay, I remember. It wasn't working. That's why I put it there. I had to use the chart. This is okay. This is where. All right. This is not. Okay. What is this thing here? Trading is in my opinion, is one of the hardest, or one of the most highly competitive business there. It's a really hard job. And also, in my opinion, you cannot teach trading. You have to learn trading. That's why it's so hard. Okay, because you may have somebody. You may have somebody. Let's put this here. To talk about trading, right? Give me a second, please. I was saying, you cannot teach trading. Trading has to be linear. Because I can say, for example, right now, okay, the market is buying from Halbach. It was because it was selling from Halbach, right? Okay, that makes this high weak. This is not going to stay, so I'm going to buy here, aiming that the market come back to this. Oh, the market has a gap. The market has a gap relative to yesterday. The market open here. Go in the direction of the gap. But those are just trade guidelines, all right? Those are just trade guidelines. If it was that easy, everybody will be making tons of money. And that's not the case. It's rather quite the opposite. The success rate of this business is really low. It's really low. People don't want to learn, right? People just is so used, we go to school to learn things, we go to college to learn a career, and then we do what we have been taught and do that over and over. It's not the case in trading. We have to learn and see. Every single thing is different. We talk about where, I guess it was being sold from Halbach. I think that was the case. Now, where it was bought 5,200 here. Okay, this is not going to stay. I got to sell here. Wait a minute, but you were buying here. Okay, can you see? It has to be. That's what I do is discretionary trading, which is putting the market putting moment putting momentum in context, right? And having this observation, staying in the trading desk and watching what the market does, right? Right now the market has two things relevant to me. It has a gap. That's one. The second thing, the market. What the heck is this? Okay, the second thing. Wait a minute. This thing is not okay. Okay, here is coming something that I need this thing. Okay, let me take another screenshot here. Two things, right? One is the gap. That's number one. Another thing, number two, another observation. Market has no interest in doing a counter-action. You open here and start selling right from there, right? It's a downside there. Mechanical selling, mechanical buying. Very short time frame trading going on, very mechanical trading going on. It doesn't have any direction yet. The volume today is quite low relative, relative to what happened here. If you remember yesterday, in the first period, let's take another screen of mine. There's too many screenshots now. In the first period, somewhere in here, we have around 10,000 contracts, right? Which would be, in this case, would be the highest volume area is this area here, and this area here. How much do we have there? Okay, we got something here, right? Not that much. Now, yesterday, the highest was 10, 12. We have 1,000 here, 1,500, really low volume. These two together combined doesn't make it, that don't even get close to 10. These two. So this is a thinner day relative to yesterday. Let's check overall volume. Overall volume is lower. We have lower volume today relative to yesterday. We have something to compare now. I'm still very mechanical, no? First sign, negative. Second sign, negative. Now, what gives me a warning sign, what puts the warning flag high is, the type of trading that we are having today. Coming from this area here, the 42, or the 52 here, half back here, this one here again. It just tell me what kind of participants do we have? What is the dominant force we have right now? That was different yesterday. It was different yesterday. If you remember how the opening developed yesterday, what kind of action we have yesterday, that's different than today. So what do that mean? Do I go short? Do I go long? What the heck do I do? If I don't know what was going on, what should I do? Anything here? Okay, now market is coming back. It's coming back to check this high. Can it take it? Can you remember what happened at the opening? And we have some buying just a couple ticks from the opening yesterday. Now we're having the same thing, but this time to the downside. Just selling really close as possible to this high. This is your short. Just a couple ticks here. Right? But it doesn't mean that I am going to do that. What I am doing here is I am trying to read the market. It doesn't mean that this is an opportunity for me. It will all depend what kind of mindset you have, what kind of strategy you have, what you are trying to do, what you are trying to achieve. The first thing we do is trying to understand what's going on. It's my decision to stay out. If you want to go short here, that's your decision too, but you need to have, I strongly suggest to you to have, first, before doing that, you need to have a plan. What needs to happen? Okay, what needs to happen? What do I do if this happens? What do I do if this doesn't happen? Where's my entry? Where I find location? What is my risk? Right? And I don't mention risk in terms of dollars. Right? I consider, for example, if we have just let's think about this, for example. Right? How do I see risk? And this took me a while to understand as well. If I had this opening with this gap, everything, the same kind of opening, but instead of opening really close to having this 52 right there, where it is now. Maybe we have this opening, this high where for example here, and this lower down here. If I have this kind of opening, maybe down here, or kind of like right here, really close, right? 52 being here, right? Really close. For me, this would have less risk than the market we are having now. And that's why I choose to stay out. Jim put it in different, he used, I remember one example that he talks about that quite often. Is you drive all the time. You drive all the time. And you have a road, right? I don't need to be a scientist to know that in this road I have less risk than in this one. I don't need to be a scientist also to understand that in this same road, if I have a shiny day, I have less risk than if it is a cloudy day, or if even it's raining. The risk when it's raining increases here. It is the same road, the same physical place, but conditions have changed. And that's why market generated information is so important. While you were carrying, thank you, Yaya. While you were talking about this firecracker effect, I wouldn't call it firecracker effect here, right? I wouldn't call it. It's kind of like forced, but you have the idea. You have the idea here. The firecracker is, more. You see. Let me show you. I guess we talked that. Yes, we talked that today. This for example is firecracker potential here. Can you see how one after another one? This is gold. This is the gold market. One after another one. A little bit low, a little bit low, a little bit low, a little bit low. This is firecracker effect here. What we have here. Now, triggering that effect. I guess we saw that in, this is a failed. This did not do that. It doesn't have much though. Here it happened. This is the ES. Can you see one after another, and this usually is a sign. This is usually a sign of the stage of the market. Now notice how this day takes all these loans out, all these laggards out, and then resumes. And now what happened out here? The next thing that happened, let's keep buying exactly from the same trend line, right? Resume the buy. And this is why Jim calls this the laggard stage of the market, right? He's having a wider, he's zooming out even more than I do, right? He's just taking all this range here, all this range, instead of doing one couple days, 3 or 4 days. He's watching the whole thing develop, and notice how the same thing develops in different ways. Okay, I still, very mechanical trading here going on. You have your trade, and these are decisions that you need to take. That we need to make. What kind of trader I want to be? When I step in, when I step out. Do I want to be part of this? Right? There are some days that might work. You have better conditions, better odds. Today's a day that I believe we can have, regardless of the gap, regardless of the opening. This is market generated information. It's telling us, this is a weak market. regardless of this, I guess we have good odds here of this day being a rotational day. Remember, those are just odds. It doesn't have to happen the same way. I mean, it doesn't have to happen. Those are just odds, right? Probabilistic thinking. Now, where the market is being bought here? It's being bought from the 52,000. I mean, 5,200. It's being bought from 5,200, sold from as close as possible from these highs. And what Jim does, I used to do this, and I chose before, I guess up until 2-3 months ago, he used to do, and this is always, I mean, your decisions are made on observations, right? And what he used to do, when he has the peaks, okay, let me call this thing, let me call that chart also. Let me call that chart here, let's put it here. Now when I had the peaks below, below 20, when I had the chart below 20, where's 20? Up here. He had plus 2 ticks here, and charts 1 tick charts below 20. And he was about, I don't remember, I guess around this time, somewhere around in this time before he decided to go also with to remain 2 ticks, right? And all that thing also was good for me, because I was, I based on my observations, I decided to keep my charts in 2 ticks, here in this time. But then I changed it to 1 somewhere here in this time at the beginning of the year, because I wanted to make short-term trades, very short-term trades, kind of like what other people call a scalping trade. It didn't work, but I changed my because when you have 2 ticks, your trades have the tendency to be developed trades that take longer to develop. And I wasn't trading options. I was trading straight futures. I want to see the reaction in the market really fast. And that's why I decided to use 1 tick charts. But 2 ticks actually remove the emotion, some of the emotions from the market. It helps you to keep emotions in control. Look at this for example, the difference between this high and this high. And now let's go to 2 ticks. Your decisions are different. You can go long here, but this actually is 2 ticks because I am using 2 ticks charts here. This prominent pole control looks more prominent when you have 2 tick charts. It depends on the mindset, it depends on the kind of trader you are or you want to be. It's what kind of charts you use. In Nasdaq, for example, here, Nasdaq I use 2 ticks here. Oh, I think, yeah, I moved it to 3 because I decided not to trade this market. I moved too much only, and when I tested this market, I was using 2 ticks here. I remember I was testing this market just on a SIM account. SIM. I am not willing. I just didn't. The market just moved too much here, and if I want just to monitor this market and see what's doing, relative to the ES, right? If there is some kind of correlation between these two markets. And I have noticed, for example, when these two markets are in sync, the movement here has a tendency to last a little bit more, to last a little bit longer, or to be a more convincing, to have more conviction in the relation when these two are in sync. Okay, let's AMR 8606. That's a new man. Welcome to Discord. The other guy is Cabrera. Cabrera is Hispanic. I don't know, where are you, Cabrera? At least Hispanic heritage. I'm not saying he's Hispanic. What is Hispanic last name? I'm going to put that thing in today's session in Discord. Just to highlight where is these things. We have a gap here. Inside bar, and this thing here. This market is to the downside, right? All the signs are to the downside right now. This is a prominent point of control, and this thing is what catches my attention here. The lower side, we have the non-excess low. Probably you won't understand this chart unless you were in the stream. But I hope that's usable. Alright, look at that. This is something I observe here. Oh, this is another reason why I decided to keep one tick chart, so I can see these formations here. Notice how it looks here in the 2 ticks and how it looks in the 1 tick chart here. I remember now why I decided to keep it in 2 ticks here, in 1 tick. Now I can see the volume drying here better. It dries here. It's not that convincing. This week, this low is weak. Very questionable. The high is not better. We have two period range. Alright, what's the trade here? Go with the breakout range, right? Preferable in the direction of the trend. What's the trend? Do we have a trend? We don't have a trend here. We just have major trends. The major trends are to the upside. Now, today, all the information is pointing to the downside. But notice where this is being bought from. Where is this being bought from? $51.93. Oh boy, it's right there, right? Support. We're talking about. Okay, there might be something here. Of course, it was bought from support. It's going to be bought from support now. Sure. Sure. Yes, sir. It's going to be bought from support. This is very. Look at where this market is at. Right here again. The same way it happened here, same way it happened here. And we are going to have a rally here, right? Yes, sir. Let's see what happens here. This is support, and this is why we do our homework, right? There are potential areas where something can happen here. what happened is what you expected doesn't happen. So I got it right here. Let's move this trend here. Where is this market being bought from? Right from the trend. 2. What? Pick your trend line. That's the name of the game here. It's right there. This lows, this low, this lows, this low. This right there in the trend. Not the trend here. Okay, okay. I see. Let's see if there's something here. How much volume relative to yesterday? Why every time it's having low. Okay, let's wait here. There might be something here developing. Okay. Yeah. When bigger time frame are involved in the daily model, how this is translated? And if we just go through all the references without seeing mechanical buying, yeah, when there is something serious, some serious selling, for example, the market opens with a gap pump, right? There's significant pressure to the downside. The market date is level and just go through that or this level like hot knife through water. Then it takes the 52, keeps going lower and lower. It may come back here. It may go through this level or through this. It may come back, make an attempt to come back, and then just keep pushing, and you'll see a conviction there. And that's why these things cannot be taught. You have to learn it. Okay? When you see this over and over and over and over, you will start to notice those little things that make the difference between one type of day or one type of action versus another type of reaction. Some people call it price action. I believe I think price action is, I don't know, no, but I think they use that part. For example, serious buying. The participation of bigger time frame, or the presence of the bigger time frame participants, it is obvious. It is not obvious. They make their participation visible when you cannot see them. All right, the lack of respect for these references is actually a sign that there can be bigger time frame participants involved in that movement. And we don't know how long are they going to be in the market. And there is not a collective, right, that they all sell or buy at the same time. But they have huge positions to fill. Call it a bank, call it an investing firm, or whatever. They can have billions or billions of dollars to allocate, or have these huge portfolios to hedge, or whatever. And they have a limited amount. Right? I have to do this. I have to hedge this, or have to put this money here. Right? How long is going to take that? Their goal is to allocate, their capital, their money, in the tightest spread. If the spread is as tight as possible, the better it is. Right? And that's why the overnight has little odds of that. They don't do that during this time frame because the volume is so low that for example, any buying, I'm going to position myself here. You start buying here, you're feeling, you can end up here or end up here because the volume is just so high. There's not enough supply here. There's not enough liquidity, to fill your position as tight as possible. You want to enter here and close it here, for example, or something like that. Who knows? That's the thing. Right? I don't know. There's no way to know that. We have some Remember, these are 2 tick charts, 2 tick increment charts. Now I am using 2 ticks here and 1 tick here. Notice how still there's nothing here, right? There's no interest up here, there's no interest down here. And but there is something here. There's something here. There's nothing here in this market right now. There might be a breakout. Remember, this low is the base of the rally. It's a trend line. We have a trend line right here, sitting right here. Again, who can be interested in selling or buying today, right in front of the number that we have tomorrow? It's very unlikely that we have huge capital today involved here. Usually, if they are here, they are going to do any kind of adjustments. This happened, may have happened yesterday or Friday. I don't even think they use charts, my friend. I don't know. Jim, I got some people, right? Okay, let's see this. Let's see what happens here. My market is coming down to this low here. Let's see this. And this can be how a market gets to, how inventory gets long. Look at where this market is being bought from. Very close, as close as possible to be low. Still, this if I just see this market in isolation, today's session, this market doesn't have any direction. If I see the relative to yesterday, we have a downside gap. This market is to the downside. If I see relative to what happened the last 10 days, 2, 4, 6, 8, 10, including today, look at what it is, right at the center of the range. Put this all to, okay. Put this together, what do you have? Come on. I don't think it looks like this. I think this is having the overnights also. You have volume here. There's a lot of actually it looks like that. But put this all these days together. This one, all from here all the way from the 6th to today. This is the range here. Right? Now the whole thing here as well. Where is coming from here? Really close to below. Remember, we talk about this potential short here as close as possible to be high. This is better. This is a better trade than this one, because of value. Value is lower. If I choose going the direction of value, I have better odds just because I'm going. But look again, it's around the 50 to 100. I'm more likely to use per market profile. Regarding your question, I was going to tell you, I got this guy. What's the name of this guy? Crudel? Let me see. Anthony Crudel, I believe. Yeah, Anthony Crudel. Jim Dalton, he's a trader also. It wasn't CBOE. He had him as a mentor too. You got some recognized people, right? Damon also was. He is. I guess he got involved in some involvement in the developing of Photon Trader. This is I use Photon Trader because they have a plugin where I can use market profile, where I can use Windows Trader. Where's another one? The other one is where is Shadow Trader? Do I have Shadow Trader? Oh, Peter Leslie said, and I don't have JJ here. But yeah, this guy too. Those are guys that were Jim's mentees, and they don't have their own opinion on the market, right? And sometimes it's very useful. You know, they have different mindsets, different way to see the markets, and they have their own. They have made their own opinion, right? I don't look too much at Peter, but I know he uses, for example, market trade and all that kind of things, right? Dual trade, I don't know what that is. I don't even know. I don't know what I was going with this. Jim, again, I guess I talk about this too. You know that Jim has involvement in the creation of the Chicago Board Options Exchange, right? He was involved also in the creation, some involvement in the creation of the index, which is now based, in which the S&P 500 is based at the time. And now JJ, he worked for a market maker. I don't know much about Peter Lesnick, but Peter Lesnick seems to be a trader. Anthony Crudell was the youngest member of the Chicago Board Options Exchange, I believe, or the CBE, or EI, I don't know which one, CBE, I don't know. But this Jim worked in kind of like with the biggest time frames, participant of the market, was involved in the clearing firms and clearing traders, all that thing, right? I would say the mindset of this guy is different because the way how all his background is or was. This one is also different. He have a different background, and Peter also is different, right? But they all have used or have seen improvements on what they do based on what they have learned, what Jim teaches, all right? They apply that to what they do. But you need to change your mindset. It is easy to make a lot of money for the market maker, because market makers just sell. They just sell. They never buy. They just sell. They are there to sell, right? But now that you don't work for this one and you start working with, with your own capital, when you say you will understand, God, man, I am on my own now, right? Trading is super hard because I don't have the power to move markets. I am just another guy here with really tiny, small amount of capital. I can do what my positions 2, 3, 10 or whatever cannot move the market. It's not as I had billions to allocate, right? When these guys work for these banks, right? Called the Sachs, Susi, or whatever. Or USB, they don't have that kind of capital now. But they need to care about what the market do or does after they place the trade, either to the downside or to the long side. They cannot just okay, I have this amount of billions to sell or to buy, right? I just allocate. My customer want to sell grains or want to buy this or buy that, and they go ahead and just sell or buy. With the spread being as close, as tight as possible. Sell, let the market come back, and sell it again, let the market come back, sell again. And when I see those guys, it's really interesting to see their point of view. I think Crudel has a podcast. JJ also has a podcast, and of course, Jim has their courses, right? You can learn from them. Everything that Jim teaches, I have been in multiple of these intensives. I got his courses as well. Everything that he teaches is in his website. Oh, by the way, he has another webinar on Thursday. Everything that he teaches is here. You can go through these webinars. You have 18, you have 180 webinars here. Every time, but you won't find people, right, willing to go through this or this. They may see this one, then this one, this one. Okay, I'm done. I don't want to see them all. But how can you expect to be a successful trader for something if you're not willing to put what is needed? You also have this. These books are just amazing books. Some of them I discovered myself before knowing him. I got this one before I knew him. This one too. And when I am listening to this one now. I think I have this one too also waiting. He used to have more here. I guess he put some here, some new ones here, and let other ones go. This is really impressive, and more of these. A lot of these books that are for trading really have nothing to do with trading. It really has nothing to do with trading, and it's really it's hard for people to grab that. How I expect to learn how to trade, right? If I don't learn about candlesticks or momentum or this or that, right? It's really, it's really hard. Man, look at this, man. Look at what happened here. We got this level from the morning, right? Or how 93 here. He didn't even get really close. Yeah, I get really close to 93 here. 2 points go. Now the market is making an attempt to close this gap. And before, I used to make this decision, right? Okay. I just don't want to be part of this market. I think that my risk is too high. All right. And then as soon as I say I thought on my decision, I see the market, picking a little edge. Man, just go something really high or something really low. Oh, goddamn. And I couldn't live with that. Soon after, I find myself, chasing the market. Right? And now I learn to accept that. I just don't like it. The market has the potential has the probability that it can go higher or can go lower. 50-50. Whichever is going to be after the fact is easy. I can easily regret something. But that's part of the strategy as well. market is attempting to close the gap. Let's see if the market can close the gap here. Value is lower, the gap is closed. It changes everything. I start to monitor value now. Now, how wide this market is? 3 periods wide already. This thing, man, this was right there, right in that trend. The question was it. Now we have direction relative to just to the intraday, right? We have range that is lower than yesterday. We have an inside bar which is not a good. This is balance. Now the market is breaking out of balance in a market that is out of balance. The market is out of balance to the downside. No. And now it's trying to come back into this range. Oh, CNBC. I don't know if you can have the T-TOS, which is think of swim. This think of swim. You can open an account. This doesn't need much. I guess you can open an account here with $50 or $100, and they have CNBC as well, and it's included. You know, and you can have these charts as well. You don't have to do anything there. You just have access to those charts. A lot of people do that actually. You know, they have this for. I have this, so I don't have CNBC, and what I do there is just and this is the thing. For example, now let's check what they have. What they say. What do I do? They're talking about bonds. Right? Bonds are turned to rival stocks. What the heck is this? September overpriced. I don't know. They're talking about bonds. Oh, no, if I see more talks about bonds, okay, that is something that traders are paying attention to. Bonds, the bond market, right? Just that if I do this, but that's very distracting. It doesn't matter, right? You know, everybody's talking about the Fed cutting rates, you know, how many rates, when it's going to cut it. They went from forecasting 8 rate cuts today to forecasting only 1. No, those, you know, you can see that, right? How distracting that can be. Those are the experts, right? They went from 8 rate cuts last year from September, October, or November, something like that. They went from 8 to 1. Now the experts are forecasting 1 rate cut. The Fed has, the Fed must, the Fed will. The Fed is going to cut rate 1. You know, those are experts. So, but this is not to trade in the bubble. Just what I do is keep it on the side, and when I'm trading, something may happen. Something you were talking the other day as about this thing. What do I call? Come on, something that triggers a reaction. A catalytic, right? It's not a catalytic, but it is something that highlights the whole round of things can have an impact in our trading. It just can come up from nowhere. What happened, you know, for what's the name for these guys who trade currencies? You know, Japan increasing rates, right, was something that took everybody by surprise. now that everybody's talking about cutting rates, Europe, the Fed is talking cutting rates. Japan just comes up to nowhere and boom, we are increasing rates. We are not going to have negative rates anymore. But wait a minute, that's something that hits the market, right? It does hit that market. Hit that market. And they were taken by surprise, right? But because they're going against everybody else, and when everybody was increasing rates, back in England, Europe, the Fed were increasing rates. Japan central bank was actually cutting. They were going to zero and going negative. Now to keep the trade, they're just doing the opposite again. And that's the random thing, right? That's for random things. That's why it's important to have, for example, to have your own. You always need to have a stop. I can enter with a position with 8 points stop and then move my stop to, for example, I have no strategies, but I have, for example, these orders that are 4 points, 1, 2, 3, 4, 8 points stops, right? I can go with 8 points stop here, or here, or whatever, and then adjust, and then just adjust. I enter, and then adjust that to 4, 2, or in this case, for example, I can go, okay, market is going higher, okay, market is going higher, we have a direction, why I will short this market, the market is about to close, okay, we have value lower. Let's see, can this market close the gap? 50, we have 10 minutes, we have another 10 minutes, low volume, but we have direction, but it's going against value. Value is lower, and this market is going against value. Still don't have anything here. Oh, you cannot have T plus in? Oh, I didn't know that. No, I was talking about. Oh, I also have. I don't know who I set this thing up, but I have financial juice. Financial juice. Here. I have financial juice, and I think somehow I have set my Chrome to have someone else. Important news, This news, when they have something, maybe once a day or twice a week, if there is something, they just pop up. Alright? CNBC, when I see it here, it's after the fact. In financial juice, you just have some small window. Let me show you where it is. I don't know. I don't know how I configure these alerts. But these ones are here, right? They just come. You just get some small window pop up here. Say, for example, Banco Japan increased rights. That was the last one I had yesterday. After, I don't remember how long. I don't remember what. Today I have another one. Russian spy chief. Okay, French military unit in Ukraine will be a priority target for Russia. Okay. And that's it. I don't have more. I don't need more of that. If I have too much, it just becomes too distracting. Well, I have it here. I set up that, as I say, I don't remember how I did it, but I said every there's something important. And it's free, right? That's why I got it. It's free. This is my photo. This is my Thinkorswim for my daily charts. This is my account, live, Rhythmic. The good thing of Photon, okay, I can use day. I can use window trade plugin there. They also have a platform to trade, but they also give me this chart, this trading platform, which I like better than theirs. And I can trade options here. which I cannot do in photon trade. Also, what else? This is straddle weight here. This is straddle weight. And this is the option, the stops that I was talking about. I have these setups here. 5, 1, 2, 3, 4 points stop and 8 here. I usually go with this, and then when I'm in, I adjust this. Adjust this to I go short here. 8 points will be a 60 way up here, right? But then I just adjust to maybe to this one. As soon as I enter, I may adjust that to this low here. Yeah? I may adjust that to this low, or maybe 1 tick higher, and that's it. And why I go short here? Because the value is lower. But I won't do anything. But that's how I usually do. There's sometimes, why I look for example those guys is they have an opinion of the market. I like Rudel better because sometimes I feel like, oh man, I lost. You just feel lost sometimes. What is going on? You can. It seems like you cannot have anything right. And then I take a look. What anybody else can be thinking, right? And then I can find some opinion. Oh, okay. All right, there's something I miss, right? Okay, the bond market, for example. Right? The bond market is, close to FOMC bonds. The bond market is, at this time, the bond market is very important, even though the charts are far from the highs and far from the lows. And that is because there's a lot of expectation for what the Fed can do, what the Fed will do. There's a lot of expectation. The market is pricing rate cuts for a while now. This thing, I usually have it on my cell phone or on a small or on a tablet on the side. I don't have it here. I don't want to use too much resources from my computer here. Oh, market makers. Market makers are what the name is called. Companies that make markets, right? That provide liquidity, to buy or sell. If you're a buyer, you're going to buy. Somebody has to sell it to you, right? So they provide that liquidity. Now that the trade has went global, their relevance is not that much, because there's a lot of liquidity that comes all over the world. Everybody can put their money here from Europe, from Asia, Africa, South America, Australia, China, everywhere in the world, right? There's a lot of capital that comes from all over the place now. The market makers are these big banks. Usually are the big banks, right? On the other side of the trade. For example, I have a position to fill. They have a wealthy client. I want to buy 1 billion or 1,100,000 or whatever stocks of let's call it Apple or Nvidia or whatever, or I'm going to buy 20,000 calls or 20,000 or 20,000 puts, right? Calls or puts or the ES, right? So they buy that. But who sells that, right? who's going to sell that? If I'm going to buy, they're buying. Who's going to sell that to them? You know? So somebody takes the other side, and that body, yeah, usually this happens all the time, right? Well, but we don't have access to this. You know, you need to be somebody like, for example, Jim Dalton. Right? You know, they have the contacts, they have the people who works in this how to work, have access to bigger trading floors. Arthur Cashing, for example, is one of them, right? If you have, you got a word, right? Somebody is buying 20,000 votes, and the company who's taking the other side of this trade has to hedge. And how do you hedge this? They are going to sell. They're going to sell futures to hedge these puts. And that selling can take the market lower. All right? But this movement, that movement is just to hedge this position here. Right? It can trigger something. If there is something like this close by, there's another one here, another one here, they can trigger some serious selling, right? Some serious liquidation here that happens. Wow, boom. But if it doesn't have downside, if it doesn't catch momentum, the market will just come back to where it was and start doing whatever it was doing before this thing happens. But this is part of trading as well. You know, short-term trading has a lot to do with this. Now look at this. Look at this trade, man. Look at this, man. Yeah. This is part of trading as well. You know, you got a short. I wasn't talking about longs here. I still know. I don't like the long here. We have an opportunity. Your risk here, you know, the risk reward here is, you know, the market really doesn't need to move much to let you know that you are. Oh, and that's market make. Those are market makers. That's, I don't know if that can help. It is not something precise, right? But you got the idea. I hope you have the idea. And regarding this is location, right? Why I was looking to the short side? Because value is lower, but how is coming also from this? I just don't, you know, I don't see too much here. You know, now I have one time frame higher. The trend is going higher. Now this market is going higher. This intraday market relative to yesterday is still a downside day. The trade here is selling the rallies. We have a leader rally here. This is a leader rally here. It's a good location here. Good location. And just this one. It was this low or this high or one tick inside this range. And that's it. That's it. Now, the next thing to monitor is continuation. I want to see what's happening. What happens? I want to see the market keep going low. But what the market's not doing anything here. Now, momentum is like the spark that causes the fire. And no, momentum is momentum. You know, for example, you have a football game, soccer game, football. We call it football. And, you know, when you have two teams, one team is beating the other one, two goals to 0 or 2 goals. Yeah, there are two scoring 2 goals against 0, and suddenly the other team scores 1. Boom. And they start, you know, they were 2-0 down, now are just 2-1, and they catch the momentum, right? They are the same thing. They are the same participant, the same 11 against 11, but momentum switches. Momentum went from one team to the other, and the other one start to attack, right, until they can break, right? And we know once we have a movement, once, and a momentum trading. Momentum is the force that has that tends to join the movement once something has momentum. Just like it's the definition of momentum, the physical definition of when something starts to move. It's harder to stop it. I guess that's how I can, if I remember well, right? Physics in high school. I apologize in advance if that's not the exact definition, the technical definition. But once something starts to move, you need to apply a bigger force to stop it, and that's when something gains momentum. The same thing happens in market. This market starts going higher, but it doesn't have momentum right now. We might start to take it. Next thing, market may take this high out, and you will notice the change of how the market start to trade. Momentum is not the spark. Right now, we may see what can happen here. For example, okay, I don't know, man. Okay, the Fed comes out and announces that tomorrow they're going to cut rates. Boom! That's what everybody was waiting. So a lot of traders that were like can be me for example, right? Decide to join this movement. When people start to join this movement, the market starts to gain momentum, and that attracts more traders to the current action, and the market starts to roll, against whatever is in their way. And that's why you never step in front of that train. You never go against momentum, because you are good odds that the market is going to roll over you. Market makers. Yeah, the market makers provide liquidity. They used to be really very important, right? In the old times. Now there are too, but there are too, but not as they used to be. But they are very important, right? Goldman Sachs, UBS, no USB, or UBS or USB. Come on, I was confused those things, right? Those back Chase can be market makers. Yes, now the market has closed the gap. Closing the gap is not a sign of a strong market, right? My bad. It's not a sign of a weak market. But for me, there is nothing here. What the heck is this? Gap low? Oh, this is not a reference anymore. It's rather the opening, right? I don't see anything here. To be honest, I don't see anything. And this can go on for a long time. I don't know for how long. I may go and take a break, or take a nap, or come back and still see the market as it is. Right? I have, and that's why I do this stream. This stream kind of like help me to relax. It helps me to understand also why I may have anxiety, you have anxiety when you got some, oh man, this market is going high. I need to go high. This market is moving. The market has closed the gap. The market is going to come all the way up to here. It's going to take this high. I have to be long here. You have that thing, right? And when I'm talking, it helps me. I never. It helps that you are there. Okay. It was. I have realized, for example, and that's why I did this. I started to do the streams to help me to focus. Then it got in the way. Then I find another ways. It helps me to identify what can I be dealing with, what can I be doing wrong. And I found, that some people find that useful. Okay? If it can help others, well, I guess we can each benefit from each other, right? It's kind of like a synergy going on here. This can be very boring. This business is not as glamorous as the movies make it look like it is. It is very boring. In the movies, you can see, trade is going crazy, right? Selling, buying, partying hard. Doing a lot of crazy stuff. It's not like that. You got to put a lot of effort on this thing. Do a lot of reading. Oh man, thank you. It really helps to. It can like boost your ego. That can be dangerous, man. There is things. There are times when you have some good days, right? And this happens. It happens all the time in this in the journey that you have. After a while, you start having good days. Oh, okay, gosh, I finally figured out the market. Good. And you get cocky, and the next day you lose everything and more, right? And that idea that we figured out the market can never be underestimated. We're never going to do that. The market, for one day to repeat, the odds that one day is going to be exactly like the previous day or like any other day from the past are very, very, very low, microscopical low. Because the markets are the sum of, beliefs, right? How many participants we have today, for example, until the fourth period, 342. For this day to be exactly like this day or any other day in the past, at this time, we need to have first the same amount of participants, right? Second, the same amount of distribution of time frame participants, the same amount of retail traders, same amount of daily time frame traders, same amount of investment money, same amount of hedging, same amount of whatever. Same thing, exactly the same thing, everything. The next thing that needs to happen, that's everybody that's making this market needs to be thinking exactly the same thing that they were thinking this day or this day or this day or whatever day in the past. And what are the odds of that happening? What are the odds of that happening? I guess it's easier, the odds that, that one glass that has been broken comes back on time and put itself together are higher than one day repeating like any of these previous days. It's just the odds are just so low, and that's why I think, and that's why strategies that are based on price only, or these indicators that are price based, they're assuming that the market contains everything, that price contains everything, and markets are mathematical, right? Markets are exact, markets are predictable, and markets are not, are anything but that. And some days there is just nothing. I can be sitting here all day long, and do nothing. Today I did something. Today I did something here to the downside. I didn't take my profits, and I let the market run against me. How many points? Let me tell you how many points. Okay, 3 ticks against me. Yes, 3 ticks against me, and I closed for a loss. And I did something. At the same time I was doing this, really kind of like about the same time I did take this trade when Nasdaq was having a rally right from this hard back. Right. I took a short here, like somebody here. Man, it was doing it just so bad, man. It's so bad. And I also decided to close this. I didn't like it. I need to see something strong. Going in the direction, because the market didn't pay attention to the overnight long or short inventory. But I need to see something that it didn't have, and I closed it. And the market came to this area. I guess we talk about also this, right? Market should have any problem going through this. If there is something serious, it will just go through this. Maybe have some rally and keep going lower, but it didn't do that. How this day is developing? Let's see. Oh, I really need to restart these charts. I need to close this problem. Oh boy, I got a lot of... What the heck? $84. That's just too much. What the heck? What the heck is this? Oh. No, this is not working. Oh, 16 to 9 the time is wrong here. This should be day. Yeah, there it is. And this also should be only 1 here. Something is going wrong here. This thing should be in the right side. This should be behind it. This should be gone. It just has too much data here. Let's remove this. Just leave it last week. Let's set this on here. I'm going to close this. Nasdaq hasn't closed the gap. Oh, we have an inside day in Nasdaq. No, my bad. It's not an inside day. Inside day will be up here. This is not an inside day. This is day to the downside. This is. Yeah. What the heck is going on here? Ah, gap was closed with another gap. Same thing as NAS as the ES here. Look at these lows, and I mean, that's a better question over here. I guess this market is following the ES. But it's showing more weakness. That one. Alright, man, I will be taking a break. I will do something, get something to eat here. If I see anything, I will post it, and I will just go to Discord. If you got any question or want to see, just use Discord. Just go over there and I'll be there. Alright, brother. Have a good rest of the day. Sure, I'm going to be here all day long. Today, the rest of the week, I'm going to be here. See you, man. Appreciate it.